Today we're going to look at doing velocity banking with the credit cards, but she also wants to pay her rent with a card. Let's go over what that would look like. The planner for me is the best tool to use when you're trying to plan this out. We went through and listed all of her bills and spending and the amounts of those. We have her credit cards with their minimum payments, her paydays, and then we also circle the statement dates for the credit cards. Now she only wants to use 2 of these cards, this Brightway MasterCard here and this Capital One card here, which that is fine. Her Old Navy card is paid off and then we'll just be paying down these other 2. The first thing we do is look through and find out what her cash expenses are. In this case, it's only her savings of $25 per month. Her rent could be considered a cash expense if she weren't going to put it on the credit card. She gets paid on the 5th and on the 20th. We write down the amounts for both of those paychecks. We only have the one cash expense, the $25 for savings coming out. These amounts here are what we have left to pay to these credit cards. Then we have to go through and decide which credit cards we're going to use for each of the bills and spending. So the Brightway MasterCard, its statement closes on the 10th. Remember, you always want your credit card balances at their lowest on the statement date. This is the date that the card balance is reported to the credit bureau. So let's plan what we would put on this card. I would probably find a way to put the utilities on this card. Some of our utility companies, we can call and do a short-term extension for just a couple days. So we would move the utilities out a day or 2, and then we can pay it after this statement closes on the Brightway MasterCard. Her miscellaneous spending over here plus the savings is $695. So after the savings, it would actually be $665 for the miscellaneous spending. We divide this by 2, that would be about $332 every 2 weeks that we're going to put on a credit card. So $332, the first couple weeks we could put on the MasterCard. Then the next couple weeks, we could probably put it on the Capital One card towards the end of the month. The Verizon and the internet, I would try to make it so we can put those on the Capital One card as well. I would call these 2 companies, see if you can move your payment date out a couple days. And then we have the renter's insurance on the 1st, which would also go on the Capital One card, as well as the rent. The rent on the 1st should be being paid with the last paycheck of the month. This is what it looks like in a list. The Brightway card, we're going to pay the utilities, the food, gas, and the miscellaneous spending, which in her case was pet food and insurance. And then the Capital One card would pay everything else: the Verizon, the internet, the food, the gas, the miscellaneous, the renter's insurance, and the rent. The Old Navy card is paid off, so we don't have to worry about that. The Ulta card, after we pay that card, we won't do any spending on it. Same thing with the Target card and the Ally card. So we'll make slightly over the minimum payments on these, that way the balances go down. The first paycheck in March is on the 5th. It's $1,850. Then we go through and see if we have any cash expenses due, which we already know we don't because we just had the one savings that's going on the second paycheck. So we have to pay the Ulta card, the MasterCard, the Old Navy is paid off. We have to pay the Target and the Capital One, which is what we have here. We know that the utilities, the food, the gas, and the miscellaneous spending are going back on that Brightway card. So we have to calculate that to see how much we need to pay to that card. This card is also $121 over the limit right now. So we have to make up for that too. Remember, the Ulta and the Target, we're not doing any spending back on those. So we'll just pay slightly over the minimum. The minimums on those were around $40 or $50. I would round up and pay $60 to each of those. The Old Navy card is paid off. We don't have to pay anything. Now the Brightway card, we know it's over the limit, $121. Remember, we had $332 going back onto this card for all of these items here, and the utilities of $215. So we need to pay $121 for the amount that the card is over the limit, plus $547 for the bills and spending, plus probably an additional $50 for the interest. This would mean we need to pay at least $718. What I would do is round up and pay $800 to that MasterCard. Then after we've paid these, everything left over is going to get paid to the Capital One card to account for those other expenses the following paycheck. So we have $1,850 minus 60 minus, we said 800 minus 60. So we pay $930 to the Capital One card in paycheck number 1, $930, and we've used all of this paycheck to pay the credit cards. Now, paycheck number 2, we go through, we find the cash expenses, which I put the savings as the cash expense for that paycheck. Everything else is going to go on a credit card, so we just need to free up the money on the credit cards that we can use. Now, we paid the Capital One card here, but we're also going to pay it again with this paycheck, and let me tell you why. The due date fell within the first paycheck, but the statement date doesn't fall until after the second paycheck. So we can go in and make a payment on the day we get paid and still have this balance report that much lower on the statement date. This may change from month to month depending on when your paydays are. But this is why it's so important every month to go in and look at your numbers and do your planning. So paycheck number 2, we have $18.25 after the 25 goes into savings. And we're going to pay $60 to the Ally card. That was similar to the Ulta and the Target card. The minimum monthly payment was around $40. So we'll pay a little bit extra to it. So we take out the $60. We have $1,765 that we can pay to that Capital One card. So we pay the full $1,765 to the Capital One card. So we've paid it twice now. So we paid $60 to all 3 of these cards here, and we're not spending anything back on those. So those balances will go down slightly. It may only be a couple dollars each month, but that's okay. As long as the balances on all of the cards are going down and not up, you're doing things correctly. It's super important for you to track the balances of your debt every month, not just your credit cards, but also your loan payments every month. If you want the debt payoff tracker that I have, it's available in my link on my profile, as well as my other spreadsheets if you're looking for any of those. But make sure you track your balances every month. With the credit cards, I track what the balance was on the statement date. This way I know no matter how much I spent back on the card, is the balance at its lowest actually getting less every month. Super important to pay attention to. And the other thing with tracking the balances of your debts, she doesn't have any, but if we have loan payments, every time we make a payment to a loan, the balance on that loan gets lower and we cannot spend that money back. So it's important to go in, track your balances, make sure everything is getting lower. Your loans definitely will be, but make sure your credit cards are too. Anyway, let's look at this Capital One card when we're putting the rent on it. So her Capital One card, the balance is $8,300 and the limit is $8,500. So we're going in the first paycheck, we're paying $930. Then we're going in the second paycheck and we're paying $1,765. Now the balance is down to $5,605. Then they're going to charge us interest, probably going to be around $200. Now the balance goes back up, $5,805. This is the balance that will be reported to the credit bureau on that credit card statement date. So when we started, the balance was $8,300 out of $8,500. So it was at 98% utilization. Now it will report at 68% utilization. Having that balance go down so much and report at a lower amount is definitely going to help the credit score. Then after the statement closes, we go back in and put those other bills and spending back onto the cards. So that was $212 plus $76 plus the $332 for the miscellaneous spending, gas, food, and then $31 for the renter's insurance and $1,789 for the rent. The balance reported at $5,805. So then we add in all of these other bills. So the balance would go back up to $8,276. So we started at $8,300, we paid the card, we waited for the balance to report at the lower amount, we put all the bills back onto the card, and the balance still went down slightly. Every month, your balances will start going down more and more. Remember the first month, we had to make up for the $121 that this Brightway card was over the limit. So we paid an extra $121 here, and then we also paid an extra $80 here. So this balance alone would have gone down around $200. Even though it will be very close to the limit once we put those bills back on there. But that was because the card was over the limit to start with. So the balances will go down a couple $100 here. They'll probably go down $150 to $200 between these 3 cards here. And then this card will be going down slightly. But remember, we can start using this $121 somewhere else if we wanted to. So next month, since we paid down the balance already and it's below the limit now, we don't have to pay that extra $121. So we probably could just pay $700 to this card. The balance will still go down some, and then we could add the other $100 here, and we would pay $1,030 instead of $930 to this card. And then this balance would go down an additional $100. But this is what it's going to look like if we're putting that rent back on the card. Her card should be going down around $400 per month. One last thing to consider if you want to put your rent on a credit card. The rent is $1,789. The limit on this card is $8,500. After we pay all of this here, we have the balance down to $5,800. It's possible for this credit card company to lower your limit on this card. Please be very, very careful of that. You either need to have this amount saved or know someone that you could possibly borrow it from if you absolutely needed to. This does happen, especially when we're paying large amounts of money to one card. I'm not saying that it will happen, but I just want you to be prepared that it can happen. It could also happen with this card, but you just have to be careful of it. A lot of these expenses though, if you were to be late on some of these, it would be a lot easier to get caught up than it would be to get caught up on $1,789. So that's specifically why I say be careful if you're doing it with rent, or if you're trying to do velocity banking with one credit card at a time. The same thing can happen if you're paying all of your extra cash to one card. It's possible that they could lower the limit. So please watch out for that. This is how we would look at doing velocity banking with our credit cards and our rent payment. But do definitely make sure that you're tracking the balances of all of your debts every month. That can be very motivational to keep going when you're seeing those balances actually are getting lower. If you want to help me, you can always like and subscribe if you find these videos helpful. And as always, let me know if you have any other questions about credit cards, velocity banking, debt, credit scores, or anything else.